Good morning, everyone. Welcome to the Stock Market Morning Prep video for Friday, April 17th. We had another quiet session yesterday. We were in the red, but if you could see here on the spiders, we really had an inside day. Not much of anything. We had that one little gap up on Wednesday, and pretty much the rest of the week was sideways consolidation. So really not a lot of movement in the markets. And this is what's concerning me, because if we are such in a great bull market, which we have been, obviously a Fed-induced rally and a Fed-induced bull market, actually, why isn't this market moving anywhere? And there's a lot of concerns out there. There's a lot of economic data that really we're not supporting what the Fed is doing. We have weakness in a lot of our indicators, and it's just something that I am being very cautious, and I wanted to bring that to your attention for your trades and for your investments. Overnight, we had China change some of their regulatory policies on short selling, and I just want to show you what's going on right now. This is the electronic ES, which is the S&P E-mini future. The market's tanked on that news, and that's why I keep saying, please do not hold positions if you don't have to. Obviously, if you were short, that's great. It also could go to the other side, to the upside, but this is not a very good way to start your day, down 13.5 handles here. Because China had changed their regulatory policy. And this is crazy. I mean, this is something that I personally would not want to be involved in. And that's why I keep saying not holding any positions until we get at least a significant correction where the markets have retraced, 10, 15% before we can be comfortable holding, stocks here. And at these levels, these lofty levels that were at all-time highs again, I could see the intraday price action is just not pretty. I mean, the markets move up, they grind up on no volume. You hit one sell program comes in, stops you all out, and then the markets drift higher again. And that's not a good sign. Today is options expiration. We usually get a bullish bias, so we are recovering a little bit from these morning lows here at 6:30. But you could see not a good picture here. This is not what you want to be involved in. So there's no reason to hold any overnight positions unless, of course, you are a longer-term investor where you don't mind riding through this. So this is just, again, a word of caution. I think the markets are basically hiding something. And what I mean by that, meaning that I think the bigger players know what's going on and just waiting to sell more stock at these levels. And what happens is that when you get something like this, you get a 2 or 3 day pullback. And then that 2 or 3 pullback starts to turn into a correction. People start to get fearful, and they start selling stocks. And next thing you know, you have a full-blown correction. Now you're down 8, 10% in a matter of a month. And believe me, risk off happens extremely fast. So I just want you guys to understand that. Okay, let's go into the indices. Nothing really has changed, but I wanted to come out just to show you. You could see we had inside day to the previous day, and then we had 3 inside days here. You could see, with not much movement at all. I mean, so again, another boring week. Hopefully today might do something pretty interesting. Again, IWM showing the leadership role here of the 5 indices that we follow. It is one of our leaders, and again, just kind of drifting higher on no volume. But remember, what happens, risk off, one candle wipes out a whole week, as you can see here. So just be careful out there. Okay, transports. Again, you guys know this is my sore spot. This is why I don't understand why transports aren't really moving higher. I understand lack of demand. I get that. But, if we are all moving higher and the markets are doing great, why isn't the transports making new highs or at least at the highs? And that's not a good sign here, guys. Not a good sign at all. So we want to see this index start to move up and break above the 20 and the 50-day moving average. Again, if we start to close below the 200-day, on a consistent basis, managers will lighten up their long position, and that'll start pushing this market into a correction. Just want to let you guys understand how that works. Diamonds, same thing. We did have an outside day of diamonds. Diamonds were the weakest of the bunch, but actually managed to hold above the 20-day moving average. So a nice slight little pullback. Volume was okay, no big deal, so nothing to be worried about if you're long. But what worries me, again, is those transportation sector, okay? One more is the Qs. As you can see, technology inside day here. So we had a bunch of nonsense all week long on all of the 5 indices that we follow. Good spotlight was energy. I mentioned that a few weeks back. I hope you guys ended up taking that, some of those energy trades that we mentioned. I do think that if energy can pull back, meaning oil, crude oil, and energy stocks, such as the oil services and the providers, I think that it would be a great little trade going into the summer months, the driving season. Okay, have a great day. Enjoy the long weekend, and we'll have a big report on Monday. Take care, everybody.